Welcome to the first full trading week of March. This month features a collection of key market-moving metrics, a full slate of central banking engagements, and the end of Q1 2023. February brought uncertainty to the markets in droves. Will the financial world gain some clarity in March? We're soon to find out. Hello and welcome back to ForexSignals TV. I'm Shane Vernier, market analyst at ForexSignals and HowToTrade.com. Last week we saw significant action across the markets, but very few bona fide trends. The USD index hovered around 105, stocks moved sideways, and crude oil stabilized just north of 75. All in all, price action was fairly reserved amid a tame economic calendar. On the other hand, the coming 5 days are loaded up with several vital reports and central banking engagements. Both the RBA and BoC are to issue their interest rate decisions, which will headline midweek trade. Also, the monthly WASDE report is due out Wednesday, so agricultural commodities will be on fire. The week wraps up with US Non-Farm Payrolls, which is sure to be a blockbuster event. So how do we trade this action? Let's check in with our expert analyst in the UK, Connor Woods, for his look at the markets and what to watch for in week 10, 2023.
So we kick off a much more fundamentally active week in the markets with Switzerland inflation data on Monday. As many economies across the globe are fighting that sticky inflation, the rise in prices has actually been far less dramatic in Switzerland. The inflation rate currently stands at 3.2% year on year, which is quite modest. However, much like global CPI rates at the moment, the signs are there that this number is actually getting larger and not smaller. So the Swiss franc has been gaining strength in recent times, but is this looking overstretched? So we're on the Swiss franc Japanese yen chart. We can clearly see this upward trajectory we're in at the moment. I'm just wondering whether the only reason we're doing that at the moment is to really come and fill, this candlestick imbalance that we've got. And there's a little bit left. You can see that here. So I'm wondering whether we've got clear liquidity to the top side at this 146 level, this clear buy side liquidity. Do we get one last run higher in this market into this imbalance level, and then we get a move lower? We can probably use this whole area here as potentially an area for doing business. This supply zone that we've got coming in, it covers this imbalance as well, just so we don't miss the opportunity. But one last run high into that liquidity, and then potentially a snap lower in this market. Now on Tuesday, the more important news starts to trickle throughout the financial world. The Federal Reserve Chairman Jerome Powell is scheduled to testify about the semi-annual monetary policy report before the Senate Banking Committee in Washington. But there's also central bank action to get excited about, with the Reserve Bank of Australia set to release its next monetary policy decision, followed by a speech from the governor. Will there be another 25 basis points hike along the way? Best market for me, AUD USD. Ever since we had this false breakout to the top side, it's been a fantastic run to the downside, aided of course by that dollar strength. This to me looks like potentially a pause pattern down here. What I see in this price action is that it's fairly balanced. So I would expect actually, if we're going to get that dollar strength coming through still after stronger data next week potentially, we could at least come and test these lows down here at 66267. Where we actually get that from, clearly, similar sort of thing. We've got liquidity here. Can we see the market have one last run higher into this imbalance and then move lower? And let me just mark that imbalance for you so it's really clear. You can see that in play. Also got that supply zone coming into play as well. So this area is really, really good for some short-term resistance into that area and then move lower. That is my favourite play for AUD USD. So Wednesday offers even more central bank activity in this really action-packed week in the financial markets. Attention is going to turn to the Bank of Canada when it releases its next monetary policy decision. On top of that, we should expect some volatility throughout the day when traders hear once again from Jerome Powell, sandwiched between a JOLTS job openings and an ADP non-farm employment change report. Wednesday's shaping up to be a fascinating session, and I want to take a look at oil, which has been a real struggle for traders. Look at this. Well, anyone who likes trading in a range, then fantastic. This is exactly what we like to see. But for me, I think oil is ready for a pop higher. If we have a look what's happened down here, we've taken this sell side liquidity now. That's an indication after that break of structure to the top side, we run back down We took that liquidity into this imbalance. We then traded higher, had a little bit of a retest, and now we're looking to grind to the top side. So I'm thinking any sort of pullback that we can get in oil, I think can be treated as a potential opportunity to at least come and test up towards that 80 level, and maybe even come and get some of this sort of triple top formation that we've got forming here. So anywhere between 80 and 82 is my say shorter term target for this oil market. So there's actually going to be some midweek calm from a fundamental perspective on Thursday, with the event of the day likely to come from the US employment claims. There's also some Fed speak and natural gas storage information due out, but I think we can safely call this day the calm before the NFP storm. So Thursday's a great day to really analyse this remarkable run-up we've had in US government bond yields, which posted fresh highs last week, as you can see. I'm wondering whether, this US 2-year yield, you can see how it surged to new highs. Can we get a touch of 5%? Is that restrictive territory? Who knows? Are we going to continue to grind to the top side? What I'm thinking is any sort of pullback we get in rates now will probably be treated with a lot of buy the dip action on stock markets. We've seen this remarkable run up in the 2-year yield. We can see it again in the 10-year yield as well, but stocks are holding quite firm, which has been a surprise to some people. So any sort of pullback here, we can look for an opportunity to potentially go long on stocks. Restricted territory in play here, a little bit of a supply zone coming into play at around 4.1%. Do we get a test of that next week before trading just a little bit lower on yields? Again, stronger data may completely blow this out of the water, but we shall see. Of course, it goes without saying, anyone who's expecting a calm end to the week is going to have a rude awakening. It's US Non-Farm Payrolls Day. Always volatile in any climate. This one is particularly fascinating after last time's explosion in the employment change figure of over 500,000. We forecasted this time around 220,000. Still another robust figure. We're going to get, above 300 potentially. As a result, I think this one has got, this event has a much greater edge to it than normal, especially given it's a week late as well. So prices or picking a market here is tough. Take your pick. You got gold, the NASDAQ. We're going to have a look at the NASDAQ. It's my favorite market anyway. And you can see if we're just following the structure down, we managed to get in some really nice selling opportunities from this 4-hour move down in the trading room, which was great. A lot of people benefited from that. We're now coming up for the correction into this supply zone. Is this a good level to sell from? We've already had the reaction and now we're looking to go again. What I'm potentially looking for is if we were to get, a solid close above 12,100, I think this opens up room to come and fill up around 12,300 and above. Of course, that's going to be really dependent on the data we do get coming out, and I think it's going to be volatile either way. Alternatively, we could just see, maybe a liquidity grab and this structure still come. And if we were to get a real strong data report again, then expect, that 200-day moving average, which I'll get up for you now, which has really held firm so far, really to be tested once more.
Thank you, Connor. Well, there you have it. The first full week of March will be a target-rich environment for active traders. From the RBA and BoC interest rate decisions to Friday's NFP release, there will be no shortage of trading opportunities. Be sure to check out a live stream or two inside the trading room. There, Nick, Connor, and I will break down the key developments of the day as they unfold. Also, be sure to tune into Friday's US Non-Farm Payrolls report. NFP is expected to shrink to 200,000, down from the epic 517 print from January. This event will be live on YouTube as well as inside our trading room. There will be a raffle, trade ideas, analysis, and much more. If you want to get a jump on Friday's action, enter your NFP guess below. We'd absolutely love to hear from you. So until next time, trade the action well, and we'll see you on our next live stream.